Good afternoon, the President of MIEA, ladies and gentlemen. I know they usually refer to this session as the graveyard shift, but I'm not too deterred. I'm going to call it the Hallelujah shift, because I think, after the food you had, you're happy and you're contented, and therefore you're probably going to pay more attention. So thank you for giving me this shift. Now my paper is actually, I've got my paper, it's out there. That is the paper I've written. I've also got a presentation, which is the slides. And the paper, I notice, is not fully in color. But if you want a colored version, you can just send me an email and I'll send it to you. And if you want a full set of my presentation material, you send me an email and I will send it to you as well. At the end of this session, I'll tell you my email number. So my paper is actually a very top-down approach. I'm looking at the global economy, global financial architecture, and coming down to terrace houses in Kuala Lumpur. So it's a sort of a thinking, a system-based thinking that looks from the top to the down. And the reason why I've done that is because that's the way I think. So starting with the global financial crisis, it was a watershed event, no doubt about it, that actually calls into question the robustness of the financial system. The system itself, to take a long view, is a continuously evolving system, and crises and events in the past have aided in the evolution of the system. And this recent crisis, which is 2008 to 2009, ought to spur even greater evolutionary improvements. And to me, relating that to the real estate market, and that includes, in my opinion, down the line restructuring of the real estate markets and the valuation and estate agency profession. So in fact, I think it is quite related, global architecture to the real estate markets and to the people who are operating in the real estate market. So looking at what caused the crisis, there are about 20 or 30 major books that have been written about the crisis. Some of them blame this factor and that factor and so on. But out of all the 20 to 30 books, the one that I really think that has captured my attention was one by Robert Samuelson. And in that, he doesn't actually blame anybody. He actually says, I think thinking along the lines of this global financial architecture that evolves, he actually thinks that after the World War II, and then there was a period of great stability during the 1950s and the 1960s, and then inflation went sort of soared in the main economy of the world, which was the United States. And it went up to 13%, which was very painful at the time. And apparently that was not really caused by the oil crisis, but many other factors as well. And then there was this Federal Reserve chairman known as Paul Volcker. He took some pretty hard measures, and together with the help of President Ronald Reagan, who came in at that point in time, they brought down the inflation rate from 13% to finally it came down to about 1.6% in 2001. So they broke the back of inflation, they brought inflation down, and what that great success actually led to the rest of the growth and development of the global financial system. It went into what they call the Great Moderation. So the Great Moderation, with low inflation, induced many things. It may have helped China to actually become a major manufacturing power. It made India come up, create bigger markets, probably involved probably was one of the causes behind the fall of the Berlin Wall, the growth of free markets and so on. and the many financial products that were developed, and part of it was had a lot of things to do with real estate. So in this great moderation, the good thing, it also comes always, there are two sides of things usually, the good and the bad. So it led to a new bubble known as the tech bubble. And the tech bubble grew, and then in 2000, the tech bubble burst. It was a big thing. But the tech bubble didn't cause a big panic around the world. But after the tech bubble, the things got shifted into the housing bubble. And as we know, the housing bubble, when that burst, it caused what is known as the world was brought to the edge of the cliff, facing and looking and staring at a depression greater than the Great Depression. So, the tech bubble didn't do as much damage. The housing bubble did, which got me thinking that housing is very important, property is very important. It's at the heart of all economies. Now, many other people have given other reasons as well for the crash and so on. I'll leave you to read on your own about those things, what George Soros said, what Joseph Stiglitz said, what Wolfgang Munchau said, and so on. And like I said, there are about 20 to 30 major books on the subject. There are many more, but I'm saying major books, 20 to 30. So everything is pretty much well analyzed. Now the thing is, the crisis was brought down, like I said, to the edge of the cliff, and we were staring at an abyss. The world was staring. Maybe in Malaysia we were a little bit sheltered, so we didn't feel the effect. But all around the world, the effect was immensely felt. And it hasn't gone away. And we may think it's gone away, but it hasn't gone away. It is still playing out. And all that has implications down the line to real estate. And what did the governments do? Well, they have created what is known as easy money. They have pumped money, QE1, QE2, there's possibly QE3. Out of the US crisis comes the Eurozone crisis. So things are going on. There's also talk about a landing in China. Some say it's going to be soft landing, some say it's going to be hard landing. So all of this is going to have an impact on us because we are also an open economy, an export-driven economy. And if you have a hard landing in China, your oil palm is going to be affected. Malaysian exports will be affected. Even now, our exports are beginning to be affected. So there's the good and the bad. You know, sometimes when they have a low money policy, hot money floods the side, it may help us a little bit. But then don't forget, hot money comes in, hot money can go out. So all this is a complex system. It's not an easy, simple system. The world economy is very complex, and I think that real estate is right in the heart of it. So is the crisis over? Yes, by some who say that, look, the governments have done all those things, and they've pumped money, and they've saved the world. But the thing is, you still have this continuous need for pumping, and a continuous need to, but there's another school of thought, usually called the Australian School of Thought in economics. They say austerity is the way to go. So the Europeans like austerity, the Americans are very Keynesian. And there are two big schools of thoughts now. And Americans are saying, oh, the Europeans are now getting more Keynesian. But, you know, I don't think German Chancellor Angela Merkel will agree with that. So you can see the whole world is still moving along, and there is no clear answers. But one thing we know, the real estate, it plays a complicit role in financial crises. It's right in the heart of every financial crisis. 200 years, 300 years. Look at Japan. Japan had a major crisis, and that was 20 years ago. And it was actually the bursting of the real estate bubble. And after 20 years, Japan has still not come out. I mean, the Japanese are very smart people. No matter what they have done, they have not come out of that so-called depression. They're now calling it a happy depression. House prices were 18 times annual household income before the crash, before the bursting of the bubble. Now, house prices in Tokyo is only 6 times annual household income. About this relationship with household income, generally, if you look at steady state economies around the world, mature economies around the world, house prices are about 3 times annual household income. And it may go up, but in some developing countries like Malaysia, we have very seldom been on average 3 times annual household income. My observation over the last so many years is that it is about 4 times. So I'm going to show you later on where we are now when it comes to how many number of times. So Japan went that way. What about the Asian financial crisis? We had our crisis as well, and as you know, real estate was at the heart of it. When it started in Bangkok in 1997, it was real estate that was at the heart of the crisis as well. And our economy as well was oversupplied and so on, and we took quite a big hit. But we did create Dana Harta and save the banks and pump money, and don't forget it's all public money as well. And we did all that, and because the world economy also recovered, and we managed to continue to export and grow. So and then when you look at bubbles and so on in the real estate market, sometimes you think that, hey, you know, there are so many smart people, and surely you must know when a bubble is forming and when to prick the bubble and so on. You would think that, and you would think that there are always smart people and regulators who will do all these things. But like I said, the system is quite big and sophisticated and complex. Say, for example, if the Bank Negara now takes measures to prick the bubble a bit, many people are not happy. He said, come on, you know, house prices going up is good. It's good for me, it's good for my neighbor, it's good for my children. What's wrong with this Bank Negara trying to prick what bubble? What do they see? So people generally like house prices to go up. But from a national point of view, it may be good for it to go up, provided it goes up with fundamentals. What are those fundamentals? Now, I think the 2 key operating fundamentals are house prices in relation to household income, because house is bought for owner occupation and so on. That's a key fundamental. That's a driver of house prices. And the other one is rental returns. Now, that's something you should study and watch and so on. There are other factors, of course, population and so on and so on and so on. But the 2 driving fundamentals that you can watch for is household income on the one hand and rental returns on the other. But, like I said, when a bubble is forming, nobody knows. There may be 1 or 2 people. In the US, when the housing bubble was forming, the rating agencies, the regulators, the people, they all said, no, housing will not come down. Housing will always go up. You'll never lose on property. Don't worry, son, you will never lose in property. That's what all fathers told their sons. So, the thing is, you can have wise people, but consider this. Suppose you're a wise man and trying to tell this herd to go in a different direction. You think this herd is going to listen to you? Nah. When the herd is in the full run for a bubble, no amount of wisdom is going to change the direction of the herd. You know, I like this picture so much, I decided to have a second one. I mean, this notion of a herd and how you cannot stop the herd. Because from the many books that I've looked at, those 20 books I said, they said there were many smart people. And they've identified who were the smart people, what they said, how did they create those things and all that. But, you know, even the Queen Elizabeth, after the crisis came out, she came quite innocently and asked, didn't anybody see this coming? And everybody scrambled around and said, oh, how are we going to answer Her Majesty? So the economists all got together, but nobody could give an answer. Nobody could say, nobody could have, if they asked me, I would have showed this picture and said, look, there were many wise men. They all knew that this was coming, but you cannot stop a herd. Okay, something to think about. Anyway, to prick this bubble, can you do it? I think after this big crisis in the US, people are beginning to think, regulators are beginning to think, governments are beginning to think that yes, we must control real estate. We cannot let it go wild. So, the people in Hong Kong are doing that. The Chinese government is doing that. The Singapore government is doing that. Well, the Singapore government recently, they said 10% additional stamp duty for foreigners. Now, if you look at the chart of people buying houses in Sentosa Island and so on, you will find there's a lot of foreigners, true, who are now buying, and less Singaporeans, and less Malaysians, and less Indonesians, and more of these, actually more of Chinese, mainland Chinese, who are possibly running away from that burst bubble in China. So in my opinion, my analysis is that the Singapore government slammed the 10% additional stamp duty not against the foreigners, but against the possible hordes of Chinese money that can flow into Singapore, because Singapore is a natural sort of a market for the Chinese money. So, gone are the days now where the government just relies on monetary policy to try and blunt any real estate speculation and so on. Most governments now are focused on doing specific measures for real estate, additional stamp duty, change the loan to value ratio. All this was not done before, real property gains tax. And of course, when we wanted to introduce real property gains tax, everybody said, yeah, why you want to put real property? You'll kill the goose that lays the golden egg. But actually, you sit back and think, I think you need the real property gains tax, except that the government should have it and then tweak it from time to time, increase or decrease the rates. But you cannot say, don't have it. So, and these are all the tools that are now being used by most governments. They're becoming very property specific. And it's also a realization, that property is a mischievous fella who can cause what you call financial crises. It has that role, it has played that role. There must be some control over property and the runaway of property prices. Looking at the Malaysian economy, I'm switching gears a little bit here. Now, this is the mother of all fundamentals, the GDP. And over the time, you can see for yourself, we grew at very great rates in the early 80s and so on. We were a very young country, growing fast. And then we had a recession in the mid-80s. It's a small cyclical recession. Malaysia was more agricultural than now. So oil palm prices went down, and the country also went into a recession, and so on. Then we grew at an astounding 10%, more or less, for 10 years. And at that time, I think many of you were there, we thought this will be forever. We didn't realize that there were external factors as well at that time that were building up. The withdrawal of money from Southeast Asia by the Japanese, which caused the Baht crisis, which caused the contagion effect in Malaysia and in Indonesia, and so on and so on. And then our market went down, and then after a few years, we grudgingly said, okay, our fundamentals were a bit too high. So the residential market was, helped by the government, pumped up a little bit. It went down 20%, and then it bounced back again. The commercial market, we all quietly forgot about it, closed it and put it aside. It didn't come back. The the commercial market, known as the office market, and the retail sector, didn't come back until around the year 2000. So we have gone through all this. We know this. But have another look at the chart again, and you see the green was very strong, very robust, and then came the Asian financial crisis with a minus 7.4% drop in GDP in the year 1998. And look at what happened after that. Did it bounce back to the green type of growth? No. It has changed. It is now running at about between 4 and 6%. So we never did bounce back, so to speak, from that glory days before the Asian financial crisis, where we grew at a stunning rate of 10% a year, non-stop. And these are some of the other things that you may need. I won't go into it. We have still had interest rates kept low and so on. Inflation went up a little bit, caused a bit of scare, and then has now retreated. Good question earlier this morning about whether property is a hedge against inflation. Property has always been a little bit heavy in our economy. It is property transactions versus GDP went up to close to 20% before the crisis, and then since then it went down, and now you can see a small little uptick again. Loans, outstanding loans. Now, look at this figure, and you'll see that loans to the residential property in 1996 was 40 billion. 40 billion. And loans to the residential property is now 268 billion. And that's got to do a lot with how the banking sector views housing loans. They think it is less risk. And under Basel II regulations, it is classified as less risk. Basel II regulations are the ones that drives banks as well. So it is less risk. But you must look at risk from another angle as well. And that angle is that normal circumstances, housing is less risk than giving loans to more risky commercial projects and so on. But if the residential market is becoming oversupplied and is threatening to decline and so on, then that notion that residential property is less risky comes into question. So whilst residential property per se is less risky, it is important for banks to also bear in mind that the condition of that specific residential market. Now the residential submarket in Malaysia so far, on a very broad basis, looking at the all house price index, the whole of Malaysia, take the whole of Malaysia, and looking at the house price index, it is still fairly okay, strong. Because the compounded annual growth rate for the 11.75 years that this chart covers was annually 3.69%. The compounded annual growth rate for 11 years. So that's quite okay, fairly stable, quite good. From the year 2000 to 2005, it is actually 3%. But it accelerates to 3.95% for the period 2005 to 2010. And then if you look at from 2008 to the third quarter of 2011, suddenly the compounded annual growth rate accelerates to 6.16%, which of course reflects some of that prices in Kuala Lumpur, hotspot areas that went up and so on. Now, I said that one of the fundamentals that drives prices is household income. Now, I've got a chart here that shows household income versus house prices, or a table actually, that shows you from August to August 2000 onwards for some of the key areas. Of course, like I said, when you send me an email, I can give you a copy of it. But the important thing is, now let's match house prices, household income, and then let's look at rental returns. Now, of course, you have to spend some time looking at these numbers very carefully. Just scroll down south and east. But I've also condensed it. So tonight, when you go, since you're not very sleepy right now, even though you had a heavy meal, and I can see all of you are pretty alert. This is not the graveyard shift. And but tonight you'll be sleepy because so many, one after the other sessions and so on. And then to hasten your sleep, you look at this chart. Or at any one time when you have insomnia, go to this chart. But I'll tell you in simple analysis, of course all the numbers don't jive nicely, no doubt. It seldom does. But in simple terms, annual household income on a very broad basis versus the house price is about 4 times in Malaysia. It is, we have noticed that in certain hotspots areas like some areas in KL and Penang and maybe a few areas in Johor as well, it is higher. It has been consistently higher. Like for example, Bangsa was 12.73 times household income in year 2000, but that has gone up to 17.5 times annual household income in the year 2011. So it has grown. What was 12 became 17. But of course I must make one qualification. When I look at household income, I'm looking at the average man. But people in Bangsa may be actually earning much more. But in all cities, you have no choice but to compare it from the average man's point of view. The average household income in KL is only 6,000. That was said by Dr. Ye as well. Or look at any other statistics. We are not a very high income economy. We are what is known, we are trapped in the middle income trap anyway. So our household income is not a big deal. What we are trying to do is we are trying to get out of this high middle income trap. So you find that in certain areas, say for example Kajang and so on, it is more in line with the average for the Malaysians, about 4 times annual household income. But I suspect that Kajang also will get revived once the MRT starts rolling in. And Johor Bahru, of course, is slightly higher household income because there are 300,000 Johor Bahru residents who actually work in Singapore. And you get 2.4 times other things being higher salaries because of the currency exchange alone. So if you look at it, you will find that the ratio is grown very heavily in some of the hotspots. But for the whole of Malaysia, it's okay. The other thing is rental returns. There's a very quiet trend that says that rental returns are actually declining. There's a hierarchy of yields in the property sector. If you have a house, if you have a bungalow house, you should properly get about 5 to 6% net in returns. If you have got a terrace house, you should get more than 3% net returns. But in many of the hotspots, it is now less than 3%. And in some of the higher areas, it is less than 5 to 6%. So you see that is indicating that the relationship is moving to a higher house price as compared to rental returns. So much for the residential market. If we look at the if you look at the commercial market, let's talk about the office market. The office market is also functions on the fundamentals driving it are actually rents. Rents drive the market. Rents determine the price. Rent determines the value. The value minus cost determines the land cost for housing land, for office land, land for office accommodation. And I'll show that to you in a sort of a model. I show that relationship in a sort of a model, and I've got a number of models here. If you clamor for me to be here until 7 o'clock, then you'll get to see all the models. But since you're not doing that, I'll show you at least one model. And the model for an office market looks like this. If you have 920 ringgit for an office space, 900 per square foot grade A office space, what determines that? It is a rent. It is a rent of about 7, 8 ringgit a square foot. Based on a yield expectation of about 7%, you get 900. And then that value of 900 minus the cost of developing and so on and developer's profit, you get the land value. You scroll down a bit. Can you go down to 1? I put it all in one page. 1. Okay, then scroll down a bit. Go down further. So the value comes to 1,800 per square foot. So in other words, it all works. It works in a meaningful way. Rent of 8 ringgit gives you a value of 900, gives you a land value of 1,800. Think about the KLCC area. That's it. So many people say. They talk it the other way around. They say you buy the land, you put the building, and then that gives you the value. That is not the correct way of looking at the market. It is the rent that drives the value of the completed product. The value determines the land value. Land value is the residue, the remaining. When you turn it upside down, your analysis will give you a wrong analysis, and that will lead you to wrong policy making. So just like in the office market, if you look at the housing market, and you look at for shopping centers, and you look at for hotels and so on, the same logic applies. So I'm only showing you one right now, and we move further, and we still continue to talk about the office market. Now the office market, here is the rent, the driver of the market. This is how rent has been since 1979 in Kuala Lumpur. So if the rent has not gone more than 7 ringgit a square foot, why was it in the year 2000, suddenly you had a price which went up to 1,005 in certain notable transactions? It was clearly not sustainable. Because if you want 1,500 per square foot for an office space, you have to have a sustaining rental of more than 10 ringgit a square feet, and that you know is not possible. So when the minute somebody tells you, I sold my building for 1,005, you must say, good for you. But you know that is not a sustainable value, because the rent is not there to support it. So everything works in the market on these dynamics, whether it's for office, or for retail, or for hotels, and so on. Of course, for retail, you have, well, I'll touch that in a short while. But let me go back to this office and look at one important chart here, the outlook, so to speak. And this is it. So you see, for Kuala Lumpur, you got 95 million square feet of prime office space. And that is here, 95 million. And then you have 20 million square feet of vacant. It's vacant. All over the various buildings, there's 20 million square feet which is vacant. These are NAPIC figures. The only thing is I took that figures, I put it in my format, and I put it all in square feet because I simply cannot think in terms of metric. My heartbeat goes up. So 20 million square feet of excess space. And what's coming? According to NAPIC, you have 19.51 coming into the market, already under construction, going to be completed. And then you have another, there's something wrong with this, there's another 20, something like 20 here. I actually corrected this chart, but the old uncorrected one is still here. There's about 20 million here. But the figures are in your paper, so you can look at it. You have you have 19.51 coming in and a further 16.7 million of planned. But the thing about the 16.7 million is this. In the last few years, we had the ETP being rolled out and so on. So the ETP is a great thing, and it's going to take us to a new level and so on. But on the other hand, it is also, as far as the making Kuala Lumpur a more livable city is concerned, it is also a property-dependent policy. Many things depend on property. So you'll have the financial center coming up with so much of additional space. You have the Sungai Bisi airport coming up with so much of space. What do you think you're going to build? You have to build office, you've got to build apartments and so on. You have a Cochrane Road, you have RRIM land, you got the private developers and so on. And there's something other very fundamental that's changing in the market here. In the past, you had entrepreneur-driven developers mainly. That is, developers who size up the market, who go forward or go stand or change direction and so on more swiftly. In the future, you have all these institutional developers coming into the market. I think they won't have that kind of flexibility because the general manager of that particular institution, he is not going to really bother so much except to get that building done. So if you give him a 100-story building to build, he will get it done. Because 2 years down the road, he's got to show his bosses that he's getting it done. You're not going to worry so much about whether there's going to be a market for it or not. So the market is also changing in that sense. So you must be aware of that kind of changing market. So this coming supply, oversupply, is quite big. Whether it can be slowed down or not is a big question. Normally, under the old mainly entrepreneur-driven market, there's a bigger possibility of slowing down, because once they see danger, they'll pull back. But now with institutionalized driven developers, you may not have that needed pullback. So it could be quite dangerous. Anyway, I'm not saying there's an oversupply in the market. I'm saying there's a possibility of an oversupply in the market. Don't forget, every building that comes up, you have to find tenants. So that is the big question. As far as the retail sector is concerned, the retail sector is also driven by rents, but behind the rents is the shopper, which is you and me and so on. If all of us decide to walk into this pavilion will be good. If all of us decide to walk and we change direction and go to KLCC, Surya KLCC, you'll do better. So it's you and me are the consumers who actually go and spend, who decide the fate of that shopping center, and who decide turnovers. And turnovers decide rents. And rents make the value. And the value minus the cost and profits and so on ultimately tell you what's the land value. So, but what of our retail market? Our retail market is slightly stronger than the office market for now, because Malaysians have been spending quite a bit. Some of us have been borrowing and spending, which is why household debt has gone up to 76%. Of course, Bank Negara is worried about that, and that is one of the reasons why they're clamping down on its household debt. But nonetheless, borrowing and consumer spending is the one of the two factors, apart from government spending, that has kept our economy growing at 5.1% in the fourth quarter of 2011. So the big question is, will the consumer continue to spend? Tourism spending has also increased. More tourists have come in, tourism spending has increased, so it's a little bit more better, fundamentally better as far as the retail sector is concerned. But as to number of units coming, some number of supply coming in, is also there are what is known as shadows of oversupply looming. So you have to watch that. Insofar as the hotel industry is concerned, the true drivers of the market is the average room rates and the average occupancies. Average room rates and average occupancies on a combined basis determine the money that comes in. The money that comes in minus all the operating costs and so on and so on and so on, and the present value, that money gives you the value of the hotel. Value cannot be that hotel sold for so much, this hotel sold for so much. Why? Okay. On a comparative basis, it makes some sense that if one hotel is sold for so much, and that hotel is the same as the one you're doing, seldom it's the same, then on a room-by-room basis, it may be the same. But actually, the real value is derived from the money that's going to come in, that has been coming in is going to come in. So in all these commercial properties, it is the income that drives the value. And the so-called comparison method has got to be viewed on the basis that you must have good and suitable comparisons, and people who use it must use the proper adjustments to it. But how are you going to adjust? Suppose you are asked that the pavilion was sold for 2,005 per square foot, how are you going to adjust it to get to the value of Surya? There's lots of differences between the two. How are you going to adjust for all that? But if you create a model that shows an income-based model valuation of the pavilion, then you can use that same model, provided it is calibrated to the market to value Surya. So you're using an income-based model for valuation purposes, which is not necessarily a purely income-based method, but is actually elements of comparability run quite a bit in that model. So, you have to remember those things. I did also go out of my way a little bit and touch about the real estate investment trust, or REITs, because we have moved up into a higher level from owning physical property into securitization of property. And we have had REITs for quite some time, but recently the REITs have been, new regulation has come in and made REITs better. So people can now go and buy units in a REIT, and it's just like owning physical property. Is it? Well, think about it. But because the government wants to deepen the financial markets and the capital markets, they give the REIT industry special benefits. No tax to the REIT company who runs the REIT and so on. But at the same time, I suppose the government expects that they pay out all the income, which also creates a little bit of a problem, because once the company pays out, how are they going to buy new properties? So they'll have to raise capital all over again, or go and borrow money. And borrowing over a certain is not encouraged by the government or the regulator. So the REIT model is slightly different. But I think, all in all, it is good that we have a REIT market, because it adds more sophistication to the market. It does deepen the market, like the regulators want, like the people who are in charge of corporate governance, that's what they want. It does all those things. But I think the REIT managers also should play a bigger part, and in return for getting all those tax benefits, they must help you and me to make REITs like owning small properties. When I own a small property, I know all about it. I even know the terms and conditions of the tenancy agreements and everything. In a REIT, those things may be hidden from me. I may not know what are the terms and conditions of those tenancies within those REITs. To me, I must know that. You want to tell me that REITs are like buying small properties? I believe you. But give me the same kind of information I will get in a REIT that I can get from owning small property. So I think the authorities should become more, to develop the industry itself. Ask and demand and get. The regulators must do that, the public must do that, you and I must do that. We need more transparency. And if we have more transparency, the REIT industry will grow faster and bigger. And it'll need more sophistication. It's like the blue ocean for property. We have more securitized products. And foreign investors can come in bigger numbers and buy our REIT units. And Malaysian property can be securitized in a bigger way. And we ourselves can go and buy overseas properties and REIT it in Malaysia. So instead of having 28 million people and having only so many number of office buildings and shopping centers and so on, because the numbers cannot justify more, the securitization of property locally and with foreign properties as well, and with investors from the Middle East and the big growing East Asian, we create the next level of property. And from that next level of property, we can go to an even higher level of property known as property derivatives. Some of you will say, oh, this man is very dangerous. Derivatives is a bad word. It's not. Derivative, anything done wrongly is a bad word. It's bad, sorry. So securitization done well is good. Securitization gone wrong but corrected is good. Derivatives done well is good. Derivatives done wrong well is not good. But what you're doing is you're opening up the market, and then you have got bigger investors from the Middle East and so on, and that is where I think the direction of the Malaysian real estate should go. So going forward is 303, and I'm almost coming to my end of my my talk, and I have to give some space for questions. So going forward, what are the main issues? I think that you cannot underestimate that the global crisis is still there and is not gone away, is not going to go away. It has changed the world. It will continue to change the world. The global financial architecture is in a heightened state of evolution right now. And that will affect real estate globally, and real estate regionally, and real estate nationally. And this crisis is still continuing, and it from time to time is going to have an effect on the economy of Malaysia and indirectly into the real estate market as well. And there's also the possibility of China slowing down and India slowing down and so on. And then there is the general elections in Malaysia and all its ramifications. I'm not saying it is good or bad. I'm saying it's got lots of ramifications. So that is for this year. And then there is possible, GST has not been introduced. And most likely, immediately after the election, you're going to have GST. There's no running away from it. And GST is going to affect property because it's going to be a tax on how houses going to be exempted, but indirectly it will affect housing. It will affect your business because you got to have a bigger number of staff to do all the GST forms and so on and so on and so on. And you're not going to get exempted. And it's going to have shift a little bit because service condominiums and on commercial land is going to be a bit complicated versus condominiums in residential land. And developers are going to be hard pressed because they'll have to because of this notion that residential is treated differently from commercial. So they will have to allocate all the expenditures. They have to, if they build a township, they must put the expenditures, the commercial expenditures this side, and the residential expenditures this side, and so on. So if they build a lamp post, they must say this lamp post is for the residential or for commercial. Okay, half here, half there. It's going to be tough. And then, but there has been a solution put forward, but whether the government buys it or not, is to actually tax the residential part at a lesser rate. And that way you don't exempt it. And when you exempt it, you have created all these problems. So anyway, that's a different story. Then of course there's this big mammoth story known as the build and sell. There's a popular, people like it because they say, teach these developers a lesson. Scoundrel fellas and all that. And we must make them deliver the properties and not run away and so on. So we must have this build and sell. But actually, what is going to happen if you have, what Malaysia is proposing is not a dual system, it's not a choice. What the proposal is not to allow build and sell off the plan to run parallel. It is actually a system where they're going to say no more sell off the plan. And only build and sell. My opinion is that, and I've got pretty much a lot of calculations to show that, house prices will increase by 80%, other things being equal. Is that good for the consumer? It's not. So why is the consumer so happy? Saying, have the build and sell and teach the developers a lesson. You shouldn't be happy. Your house price is going to go up by 80%. Eventually, when the system kicks in. And they say that in Australia it's like that. No, it's not. There is no legislation in Australia that says the Australian system is a single build and sell system. There is no country in the world that has a single legislatively imposed system known as the build and sell system. So I think everybody is being misled. Anyway, Michael Yams should be making this call, not so much me. Now, I think going down the road in 2012, there will also be a possible tweaking of the rules for housing loans and so on. Whilst we think, hey, come on, don't kill the goose that lays the golden egg, I think Bank Negara also has their duty to ensure there is a stable housing market. I don't think house prices should rise. I think house prices should rise with fundamentals, along with fundamentals. Otherwise, there's no reason for house prices to rise. Happy as I may be when it rises, I don't think nationally it's good when house prices rise and rise against the fundamentals. And I think that there could be other monetary and fiscal measures that may come about because of the global crisis, ongoing global crisis and all that, which may be positive or negative for the economy as we go forward to 2012. And my conclusions, I'll let you read later. So, thank you very much. And that's my email. If you just send me a note says, please give me your charts, colored version, I'll immediately send you a copy. It's a very important email, please write it down.